Ambareesh Baliga, independent market expert, joins us this morning to help us understand where is this story going, because Jefferies, Mr. Baliga, has clearly said that the problem now seems to be structural. So it doesn't seem that this pain is going to be temporary. Rather, this is something which is going to be long-lasting and is likely to take in its wake investors who have bet on India's IT story.
Yeah, because this pain is clearly going to last a few quarters. It's just not a very short-term sort of a pain, because AI surely is a threat for the IT companies,
Right.
and I think it will disrupt the way they've been working all along. However, I mean that could be an opportunity to cherry pick those which have the ability to ride through this disruption, because in the longer run, I think the IT companies would have to reinvent themselves, become more leaner with productivity multiplying. And employees surely need to reskill themselves to remain relevant. I mean, we have seen disruptions earlier, but with a different name. Although, like for example, Y2K, the cloud computing, SaaS, when it was, when it came. But every time, we have seen a disruption. It has also been an opportunity, because people were, and at the same time, I would say people are only bothered about the IT companies getting affected, but even the other companies, for example, in manufacturing, services, retail, I think will be affected by AI unless they are able to utilize it in an opportunistic manner. Because at the same time, I'll take you back to the 90s. I mean, computerization itself was a threat. I mean, just see the amount of employment it has generated in the last 3 decades. So I think every threat brings with it a new opportunity, and it's up to us as to how we take advantage of that. So the way I see is, finally in the next few years, we will see a much leaner sort of IT sector, and productivity, I think, will improve substantially. So basically, I think as investors, we need to, identify IT companies which are more fleet-footed.
All
And
right.
like what I've been saying about other sectors, I mean, recently Bajaj Finance Management, I mean, said on an investor call that they deployed AI to analyze about 20 million calls, and they generated nearly 1 lakh new offers for which the information clearly was not available previously.
Right.
Like I said, I mean, AI is going to disrupt across various sectors, whether it's manufacturing, services, retail, even the government. I think AI spends have to increase for everyone to remain relevant.
Right, but I mean, we will sort of, seek your input on cherry picking those IT names in just a bit, Mr. Baliga. But, staying with the theme of AI-led disruption specifically for the IT sector. Now, India's IT sector, $300 billion or so in total valuation, is largely been playing and operating for decades now in the cost arbitrage game. Now, this cost arbitrage gets leveled out with artificial intelligence. So what exactly continues to be fundamentally the competitive advantage that the Indian IT sector will have over its peers, let's say anywhere else in the world, be it Vietnam, be it Philippines, be it even developed economies like the US or UK, which can use the same models and get the same code written?
No, that's true, but you still require people. It's not that, I mean, for example, a specific project, if it requires, say, about 500 people to work today, uh, with AI, that 500 will not become two. 500 will possibly will become 100 or 150.
Okay.
At the same time, I mean, you need people who have the domain knowledge. That's the most important thing in AI. Because, I mean, in simple terms, when you say garbage in and garbage out, so when you're putting in the codes, even for AI,
Yeah.
I mean, you need to have the domain knowledge, which fortunately, I think Indians have been gathering that domain knowledge for the last so many decades. I
Right.
think that is what will come into play.
All right, Mr. Baliga. But specifically, you said that cherry pick stocks. I will ask you for that recommendation. But there's also this strategy that people say the bellwether IT companies are going to bounce back. Buy on dips would be an opportunity. How does one assess, is the dip enough? Is it enough for you to jump in and accumulate some of those those headliner IT stocks? Because look at the returns, that the negative returns that the IT sector has delivered. The Nifty IT is down almost 27.5 6.5% since 1st of Jan last year. If you look at this year alone, year to date, it is down about 17.3% already. And just this month, the month of February, again, the IT sector, the Nifty IT is down about 17.5%. This morning, you're looking at these big names like Infosys and HCL Tech already down more than 3%. How do investors ever know whether it has bottomed out and this is really the time to buy? Or do you suggest keep accumulating on every dip and wait for the sector to bounce back?
No, I mean, see, you'll keep seeing some amount of bounce backs because, I mean, any sector, not just IT, I mean, on the way down, you have those couple of bounce backs. So traders they can utilize those bounce backs. But as investors, like I said, I think we need to watch closely as to which are the ones which are able to reinvent themselves. And I believe it will be much easier for the mid-sized IT companies. I'm not talking of the small ones because, I mean, they may not have, I mean, the deep pockets which are required for AI. And the larger ones may possibly be much slower in adapting because of the sort of, I mean, the huge employee force they have.
Right.
So I think one should be looking at the mid-sized ones, which could be possibly be like more fleet-footed in adapting AI.
Right, which is pretty much you're mirroring the views that that Jefferies also came out with yesterday, that go for the mid-sized IT companies which are likely to be more agile. But any picks that you want to give our viewers this morning, sir? Should they look at, let's say, names like Persistent,
Absolutely.
Emphasis, Coforge? Are these good names to look at, or these are already a little too big in the mid-sized category?
No, I mean, I would say that continue to look at companies as, I mean, big or small as the ones which you mentioned, like Persistent, Coforge. I would also add a Tata Elxsi in this, although it's much smaller than these, but Tata Elxsi also should benefit.
Tata Elxsi seems to be one of the names that comes in this morning. But again, that stock also down about 2% or so today, so might be a good opportunity to buy. Meanwhile, I want to get your views on some other stocks which are in the news. And I want to begin first with IDFC First Bank. And after that fallout that we saw yesterday of the stock closing, what, about 16% or so down, the 590 crore rupee fraud linked to 4 employees in some accounts of the Haryana government. What next, sir? How do you see the story really pan out? Is this going to have some sort of a long-term impact on IDFC First Bank and overall the private sector banks if we see money from government accounts actually moving into PSUs, which seems to be a genuine case building right now?
Possibly, because see, I think, I mean, like more than the financial impact, I think the financial impact is secondary. I
Okay.
think the question of on reputation, because this is the first major issue which has come up as far as IDFC First is concerned after Mr. Vaidyanathan took over in the last 8 years.
Right.
And all this fear, I mean, what next? Because if you remember IndusInd, also, I mean, we kept hearing new issues coming up every now and then, even after the management confirmation that everything is fine.
Right.
So at the same time, you'll see the regulatory scrutiny on IDFC First. I think that will slow it down. I mean, after this major correction which we saw, I don't see a major fall from here. But at the same time, I think moving up immediately, I think I mean, it's going to be quite difficult. And this also points, I mean, whatever has happened and whatever has happened in the past couple of, I mean, years, as far as the BFSI space is concerned, that this is one risk which is there because, I mean, we have seen huge amount of wealth creation and at the same time, we have seen corruption in the system at unprecedented levels.
Right.
So I mean, many people are trying the easier way out without really bothering about consequences. So this will continue despite the sort of checks and balances which are there. So BFSI space, I think we need to watch out for these issues which will keep cropping up.
All right, so be watchful of the BFSI space. Meanwhile, another stock in news is Bharti Airtel, which has said it's going to invest as much as 20,000 crore rupees in digital lending by way of its Airtel Money platform. Investors not taking kindly at all to that news. The stock is down about 3% or so. Again, linked to digital lending, high-risk business, and the fact that Bharti Airtel continues to otherwise draw up good numbers quarter after quarter. Is that the fear really with investors right now?
Yes, sir, because I mean, any corporate which moves away from its core competence and invests huge amounts in areas outside that is not really taken kindly by the markets initially. But I would say, looking at the sort of cash flows which the main business generates, I mean, I would still, I mean, wait and watch. I mean, I wouldn't be too negative because you can always, I mean, have a new segment where you're investing, where you could possibly do well going ahead. I think Reliance is a major example out there. I mean, they moved out to various sectors and did decently well in each of those sectors.
Right.
So I think you should give that chance to Bharti.
All right. Another stock in news happens to be Ola Electric, which is going to cut down on its store count from 4,000 stores, which it had at the end of 2024, to as little as 550 this year. A massive climb down for Ola Electric. Any view on that stock, or do you think this stock is history? It's time for it to delist, and investors should just pocket whatever they can find as remnants of this once glorious IPO?
Absolutely. Post the IPO, the sort of a move which we have seen, and from nearly those 150, 170 levels to below 30, currently is at about 26, I think it's a major fall from grace. High expectations in those days to clear trust deficit right now. End of the day, when you're investing, I think invest in a management where you know that the management, whatever they say, carries weight. Because today, whatever Ola management says, I really don't think you can really believe it because things are completely different in the next few months. So I would say, as a investor, stay out. As a high risk trader, yes, possibly.
All right. As an investor, stay out. As a high-risk trader, possibly. Well, a very, very clear signal there. My final recommendation or sort of input from you this morning that I'll request: Adani Power, again, stock in news, which has said that it's going to invest as much as 40,000 crore rupees in Jharkhand and Bihar. But again, investors not really very enthused with this new investment proposal. The stock is down almost 0.75 percentage point or so. I thought investors should take kindly to any fresh investments which are likely to add to profitability. Why this negative reaction on Adani Power this morning?
No, because the sort of huge investments they are making, I think we need to start seeing decent amount of returns. I think we should see those returns in black and white before the market really digests the sort of capex they're doing.
Okay, let's leave it at that for this morning. Mr. Ambareesh Baliga, as always, pleasure having you here with us on News9, and thank you so much for your time.